Welcome everybody. This is the Thursday evening of Viper trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. First, we got to knock out our standard disclaimer. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Okay, good. So we're going to do a couple of things tonight here. I'm gonna mix it up a little bit. I'm going to do a combination, since we have so many visitors, of sort of teaching the system, what you're looking at. Let's get over some charts, because I got some stuff going on here. Plus, we're going to play around with the object trader, which is the best tool ever. So I went ahead and put some trades on here so we had something to watch. I have several other trades set up that I'll cover in a minute, but I wanted to start with these. So this is, for those of you that are completely new to futures, we are in what's called the Asian trading session. So this is their morning over there. It starts at 5 o'clock Pacific, so it's just getting kicked off. Some movers that you typically see would be, this is the yen futures, 6J. Now back over here, I don't know if you can see this. Let me back up before I get into the trades itself, so and give a little sort of foundation for what everybody is looking at. And let's expand this chart out so I can pretty clearly, show what we're talking about and what we're doing here. So I'll just completely, I have these targets and stops backed way out of here, so nothing will get hit while I'm trying to show this. All right, so there are several different types of futures instruments if you're considering trading futures. If the instrument starts with the letters or number 6, these are currency futures. All right, so 6A is the Aussie, British pound, C is the Canadian, E is the euro, J is the yen, S is the Swissy. So they're very highly correlated to the Forex US dollar cross pairs. However, they are futures versions of those instruments. Okay, so they trade like a futures instrument, but they're equivalent. Like if I was to put a Forex chart up here with a yen dollar cross pair, it would look very, very similar to this. So it gives you the ability to trade currencies without having to deal with the Forex. Okay, crude oil, everybody has seen in the live room. Gary heavily trades that. I trade it too. It's a $10 a tick instrument. It moves fairly fast. You got to be careful to know kind of what you're doing when you trade crude oil. It can make you a lot of money fast. It can sting you too. And by the way, I want to pause here, and the reason I'm taking a second to cover these instruments is because as you begin or continue your trading career in futures, you have to realize that instrument selection is critical and key to your long-term success. I know a lot of good traders. They can see these trades, they master the tools, and they get in front of the DAX or some other instrument that they just can't get in sync with, and you can lose a lot of money very quickly. Okay, just a word of warning. I'm not trying to scare everybody, but what I'm saying is this, is that as you trade in sim and you learn these instruments, each one of them is a little bit different in how it trades. The dollar index is here. That's the DX. EMD, these are equity. This is the mid-cap 400 futures. ES, of course, is the EMA S&P futures. I'd strongly recommend you stay away from the DAX market. That's kind of the German equivalent of the New York Stock Exchange. Very, very wild, woolly beast. These two right here, I wouldn't recommend trading those too much. You can also look at gold. We're going to look at gold tonight in the Asian session here. And just wrapping things up very quickly, of course, in the room we trade the NASDAQ mini futures and the Russell TF and YM. These are commodities down here. This is wheat, soy. You got your bonds in here, your corn. Here's the FTSE futures. We don't really mess with these too much. I can explain those at a later time if you had questions on them, but I'm going to sort of pass over them for now. All right, so that's the instruments. Now, when you're looking at these charts, there are several things that should, sort of jump right out at you. First of all is the background colors. You have a green, you have this interim color, and then you have red. Generally speaking, when the background is green, this isn't always true because sometimes you're in a range-bound condition, but sometimes you're for the most part you're going up. It's considered to be an uptrend. Likewise, if the background is red and you're stair-stepping down, obviously this is said to be a downtrend. Pretty straightforward. So visually, that's what you can quickly pick up from a chart, is what kind of trend you're in. It's this quick analysis that'll allow you to decide which trades to take, right? So generally speaking, in a downtrend, well, let me explain the uptrend first. Here you can see that we had a little consolidation patch here. And this would have been right around the close of the market. I'm here in California, so this is all Pacific time. And the markets trade generally for the equity markets here in the U.S. from 6:30 a.m. Pacific. The crude oil pits open at 6, and then they close at 1:15 our time. So if you don't want to hold overnight positions, which we rarely ever do, this is all intraday trading. So we're in positions and we're out of positions throughout the course of the trading session. We do not hold overnight. Now, when this particular market 6J went into an uptrend towards the close of the trading session here at 1 o'clock Pacific, you can see there's what we call a thrust move. This is where the market makes a push in a given direction. Now, when we get into looking at markets and analyzing markets and what have you, we offer a word of caution that you definitely do not want to buy or sell the thrust moves. Okay, this is where a lot of traders get into trouble. The market pushes up. They're finally convinced it's going up. You put in a buy market order up here. Meanwhile, the smart money is waiting for what we call retracements. This is where a market pulls back in a trend into a clearly defined support area, which is where we step in and buy the market. So for instance, this would be a buy long on 6J when it came back and hit what we call the midband. So the other prominent thing on here, the two other prominent things are the bands themselves. I don't know if anybody's ever explained what those are. They're a series of, you have the thick sort of chunky midband here. You can see that when the trend is up, it's stair-stepping up like this. And then you have a series of bands around it, 1, 2, 3, 4 above it, 1, 2, 3, 4 below it. And so in our trading methodology, much of it calls for trades to be taken at or around the midband. It's a little bit of a reversion to the mean type of deal. In other words, when markets get far distended from the midband, there is a tendency for them to pull back to it at some point. So here, for instance, this long trade here worked out very nicely. I won't get into like trail stops and targets and all that sort of stuff right now. We're not gonna focus on that. I'm just gonna talk at a very sort of high level until we, later in the session we'll drill down a little bit on that. Now notice what happens here. And this is where things get a little fuzzy for some traders. Is what do I do when the market comes below the midband and the trend is still up? Is that a fair assessment for most of you in here? Not only everybody, the subscribers, the folks that are with us, but the visitors. And I understand that. Is that a challenge? And I think it's because we're all sort of thinking in our mind's eye that visually speaking, this midband should hold in trends. And so, for instance, when you saw something like this little consolidation patch here form underneath the midband, you might be thinking up, continuation, bounce, and this thing's going to do this. In fact, you might have even taken an object trader region box and boxed that in with a bias to the upside. which would have never been filled, right? Notice how it never closed above the midband outside of this box. So that is part of the reason that you have these transitional backgrounds. It's a little bit of a heads up telling you, hey, you know, something might be, a trend change may be afoot here. Now, the critical assessment that we make in determining whether there is a trend change or not is how it reacts when it comes back up to resistance areas. In other words, is it going to push up through here and continue the trend? Or is midband going to act as resistance as it did here? Is it going to roll over and take the support level out here? Clearly, I think everybody can see that when this support level was broken, the background went to red, midband stair-stepping down, all the bars are red, stealth is in place, this little sort of snaky line right here is called the stealth. You probably heard that referred to. And so you have to be careful. You know, this is a heads up that a trend change may be afoot, and so there's different ways to approach this. Let me check on our position real quick here. Still floating around in between the targets and the stops. I'll come back and talk about this position in a minute. I don't want to get into that just yet. We'll get to that. And there are different ways to handle this. This can also be referred to in the live room as what we call a phantom trade. A phantom trade is simply this. After you've had a protracted uptrend move like this, okay, so the trend is up, you come underneath the midband, and the market has what we call a deep retracement. We used to call these deep probe trades years ago, where it comes to the outermost band. Sometimes it dips into it, sometimes a little bit above it. For the most part, this is considered what's called a phantom trade. So in other words, in this condition, you are still buying the market here. Now, after it went up and hit the midband and rolled and came to check it again and started doing it again, and it wasn't breaking up is the critical piece here. It was not breaking up. Everybody see that? Right in here, I'm talking about this little area right here. Everybody see what I'm talking about? The fact that it was not breaking up and continuing the up trade was a heads up to you that perhaps this was going to, in fact, break down and go the other direction. So it would have been very possible for you to take the Object Trader region box, engulf this area. In this particular time, since it was firing into the Asian session, you're expecting good movement, you could have enabled long for a breakout this way, enabled a short for a breakdown this way, and if for the short side, you would have been filled short on the close of this bar right here. Now, moving on, if you totally missed that, if you don't like these transitional areas like this, where it's unclear to you what the market's going to do, once again, we cannot, you know, our rules call for not following the thrust move. So we're not going to buy or sell that thrust move, right? We have to wait for what? Let me go back here. Let me ask you a question. Let's say you come in and you start looking at 6J. 6J is all the way down here, and it's 1621, just, you know, not too far before the Asian market opened, and the market's sitting down here. Do you short this area right here? I mean, look at it dropping. It came all the way from here. Man, this thing's tanking. If you're going to catch the next leg of this thing, you better market short right in here, right? Anybody with me? Anybody pressing that sell button here with me? Sell market. What say you, team? What's the vote? What's the consensus of the team here? No, you got to wait for the retrace. Getting some fun comments coming in. Excuse me. David D says, Mr. Trump would like to take the short. Sell it with a 50-tick stop. There you go, Carl. No. Okay, right here it is again. That's several people coming in late, so don't worry about it. We're going to cover this material so everybody gets it, you know, pretty quickly. This is what we call the thrust move, right? The thrust move is in the trend direction. That's where it's making a push in the trend direction, which of course is down, right? Trend is down, market is thrusting down. So we have to patiently wait for what we call a retracement. The market has to pull back, right? Now notice what happens here. Let me advance this. Market comes all the way up. Hold on. I think we're going to come down and hit my target. Get that puppy out of the way. This thing's dropping pretty good. I'll manage this trade in just a second. So off this retrace here, now I know when I ask that question, everybody says, oh, I wanted to come back to the mid-band. Hey, Eddie, good to see you made it, buddy. Well, in this case, it did. It came right back to the mid-band, hit the mid-band, went above it, and rolled over right here. Textbook mid-band roll trade. Everybody see that? Just a textbook mid-band roll trade. Hold up, we're coming down to some targets here. I got to get these out of the way before they fill them. I want to show this trade too. I don't want to hit my targets. Get them out of the way. Oh my goodness. Making some money tonight, huh? Yeah, we're short gold and we're short 6J. I will circle back and manage these trades in just a second. I don't want to get to those just yet. I want to keep with the foundational building, especially for everybody new here, okay? I'm moving the target. I'll move the stops in a minute, Mindy. Thank you. Thank you for that reminder. All right, so back here, now it's 4:30 Pacific, 16:30. We had our retrace, we roll, and the market starts to drop again, all the way until where we're at right now. Now, what I did before we opened the room, just before we opened the room, I activated Object Trader. Any questions? 1228. There was a red background and a downtrend. Why did you go long? 1228. Let me answer PW's question here. Back over here. Well, it was the close of the session. But there's two. Okay, let me answer that in two different ways. All right. There are times in the market where you can let markets go either way. If you have a high energy time, if you have a news event, if the market is opening, if the market is closing, there's different times where you can box in at the mid-band and let it go either way. Okay. In this particular case, you are correct. Yes, that's right. PW for pointing that out. You had a number of beautiful textbook rollover short trades all the way down in this downtrend. Absolutely. And the point PW is trying to make here is that with this long downtrend coming out of this little trading range here, shorting all the way down, and then it double bottoms here and comes back up. At the time this occurred, why would you not think, why would you not have a short bias on the box, which would have never filled? And if you had a short bias, in other words, short only was enabled up here on OT, then you would have never been filled short and you'd never been filled long because you didn't enable the long side. That's quite possibly true. Yes, I'll give you that. Now, but we did go on to say that once the background changed with the thrust, took out all these swing levels, changed the background bars are blue. Now we're looking for we're looking to get long, which happened on the setup of this mid-band box right here. Yeah, so this is a good catch. Good catch on that, PW. Thank you. All right, so let's step forward to the current condition and quickly go through the trades that we're in right now and why we're doing what we're doing, and now we're going to go in to start managing them. Okay? All right. So before the session opened, there were several charts that I have put Object Trader on, and I wanted to get some things on here because it's boring to sit here and stare at markets that aren't moving, and there's no trades to teach anything for. So I went ahead and I just put bar close on. I believe it was back here. It was either here, I'm saying on the retracements. See these retracements? See how it was pulling back up here? Pulling back up here. I think it was in here. This is just before I get ready to open the session here, and I turned on bar close. You can see it right here. The trend was down, so at the time I'm not going to do it because I don't want to interrupt it. I had short enabled only. If I do this right now again, it will re-short on another bar close. So let me go. Some of you might be completely unfamiliar with. Oh, almost got this stop. Let me get that out of the way there. Now, when you first look at this tool, it might be a little daunting. I understand that. You're saying, look, Charles, this is a lot of information to go through here. This thing looks very sort of scary, and, there's a lot I look at all these buttons and everything. Let me explain sort of a quick genesis on how we got Object Trader, how it was built. I think it's maybe going on 3 years ago. It started from the need to be able to somehow have objects that can trade markets like region boxes, for instance. Let me explain what I mean by object type. We have a region, we have array, we have a time trade, bar close, and sniper. In the interest of simplicity, I'm just going to tell you what these are, but I'm only going to show tonight the region and the bar close, because you can make a very good living trading just those two tools alone. The ray is where you simply draw a ray. You take your ray tool, you place it into on the chart where you're looking for a trade, and then you activate it long or short, and when it's breached, you get in. I'm not going to show that tonight. At a high level, that's kind of how that works. Time trade, you set a specified time to take a trade, and then it'll take the trade based on the time setting. I'm not going to cover that tonight. And the sniper is where you simply put a line. You put a line, you enable it long or short, and when it closes above or below it. I actually have a sniper trade on NASDAQ right now, and I'll show that in a couple minutes. Most of the trades you're going to do are either going to be region, where you set a region box, and we have the way you do that is you hit insert. I'm going to go ahead and do it, but not enable it. Now, once you hit the insert key, notice what happens here. The box appears on the screen. Okay, I got to get this target out of the way. It's going to come down and hit it. And this thing is falling off the map. Everybody see the box? This is the region box. You position it where you want it. I'm going to get it way out of the way so it's not going to do anything. And then we have a hotkey that is enter. And see, it turns a different color. Now, when it turns this green color, it's active. You hit enter again, and it deactivates it. It's that simple. So, for instance, up here, see where I've drawn this box? This would have been an opportunity to draw a region box around this area, engulfing it, turning short on only, short enabled. I'll click it real quick, turn it off. Short enabled, disable, like that. Okay? You hit your enter key, and then in this particular case, in this example over here, you would have been filled short on the close of probably this bar right here, if not definitely that bar right there. So the concept is very simple. You're taking the Object Trader region tool. First of all, you're patiently watching you're determining the trend for step one, right? Obviously, we're patiently waiting for retracements into, in the case of a downtrend, resistance areas. Yes. We take our region tool, which is our box. We position it around the area we want to trade, either long or short. We toggle on the side that we want to trade, long enabled, short enabled. Very straightforward. Once we have our appropriate direction selected, we hit enter on the hotkey, and this box turns green. That's it. That's really all the steps to it. It's not any more complicated than that. It's really easy. I know when you first look at this thing, it looks very daunting. You can, I'm not going to get into all these settings tonight. That's just too much to be like drinking from a fire hose. I don't want to blast you with all the trails enabled and all the sort of technology behind all this. That's a little too much to cover, what I'm trying to do right now. Let me get some of these things out of the way real quick here. I just want everybody to sort of get a fundamental basic understanding of what's going on here, okay? We'll get into this in another session, more detail about this. All right, so going back to the current trade. All right, so like I said, before I opened up this session, the market was, this 6J was retracing. It was coming up into here. I went ahead and I turned bar close on. I got to be careful here. It's going to re-short if I do it. Short enabled only. I'll just toggle it very quickly so everybody sees it. Bar close, short only. And I had one contract, so the quantity of contracts is here. 1, 2, 3, 4, etc. I just put one on this particular one. And so up here, everybody see this little retrace that it had up here? Whenever the bar closed and I had it enabled, it flipped and took the short. Reverse, David H. Long enabled short enabled disabled, reversal enable disable. Reversal would work in cases where, you know, say you're inside of a box, you've gotten short, and you want to, you know, you want to allow it to flip the other side when it comes out the other side. So you would enable reverse. That's what reverse does. For the most part, you're going to leave that disabled. You know, you don't want to get flipped around in a bunch of chop and you know, you're long and then you're short, long and short. That can kill you and eat you up. Pretty much, you know, you want to be looking for the appropriate entries on the right side of the trade, right? Now, when this bar close fired, it went ahead and took the trade. And the beautiful thing about Object Trader is that it automatically puts in the targets and stops. Now, when this thing initially fired, I can tell you that the initial stop was, I'm going to go back on this. I want to say it was 8, not 87. The initial stop was 13 ticks, and the initial target was 8 ticks. Now, you can see here from how far it's dropped that if I left those initial targets on, it would have hit the target, you know, would have taken the target out a long time ago. So this is the beautiful thing about Object Trader, which you cannot do on Chart Trader. If you're running a regular strategy against market, if you have just a regular enabled strategy, not Object Trader, you have to have a separate chart to manage the trades, and it's kind of a pain. Carl wants to add another one. Yeah, there's Mindy. I'll point that out. That little training video on the site before we wrap up here. All right, now we have an interesting thing here. Carl G has typed in that he wants to add another contract short when we come up and we hit this mid band. Let's take a vote from the team. Anybody else want to do that? We're up about 168 bucks on one short, 180 bucks. Anybody want to short a rollover here and add to it? Ooh, Carl's a genius. All right, tell you what we're going to do. Let's go ahead and enable. There, just took it. There you go. Did everybody see how quick that was? I had bar close on, I hit short enable, the bar closed, and it added. Now look where the first target is. Let me blow this up and let's start to manage the trade. Everybody sees why we're doing what we're doing, yes? I want everybody to be clear on this. So, and don't worry, we'll come back and manage the gold trade, and I have a long on NASDAQ, which I'm going to show in just a minute too, okay? Let's just stick with this one. All right, so what we did was, excuse me, our initial position was up here, and we added to it, so now we have a blended average short position. And we have two targets in place. And our stop is way up here. So my question is this: how are we going to manage the targets and stops now that we're in two? Let's first decide what to do with the stops. Let's take a vote. How many of you want to tighten the stops for our two lot to just above the mid-band right here? Yes or no? Does that look like a good place? Or is that too tight? You want it tighter or looser? You type in what you want. If you like this spot, I'll leave it right here. A lot of yeses. Now, let's talk about the reasoning on why we would put it there. Well, first of all, I would say to you that it looks to me like there's kind of a little shelf that's set up at the swing right here. See the predictors? By the way, you can toggle those on and off like this. If you think it's too busy for you, turn them off. If you like them, put them on. It's that simple. And of course, you got the mid-band there, and you have a predictor sitting there as well. So there's many, many reasons why after you had this thrust move down like this to the swing low right now at 84600, that we've pulled back up, and we have every reason to believe that this should hold as resistance. So what I like to do, if you see a clearly defined resistance area in a short condition, is just go a couple of ticks above it. So that's a good spot, right? That's a good spot. Now we have a couple of targets on here. We have this short target that's 8 ticks down, which is just above this swing here. That would be your scalp trade. So whenever you get to a position where you are, by the way, a bunch of people are coming in late. Don't worry about it. This is fully recorded. It'll be on the web for everybody to download and watch tomorrow, especially if you have to leave early too. A lot of people came in late. A lot of people got to leave early. We understand that, no problem. That's why we record these. Anyway, back to this. So what we like to do, in the room you're going to hear this a lot. Okay, so we're going to short a rollover anywhere up near the mid-band here at the 520. You might hear a call like that, right? And essentially that's saying that that is a summary of the following. The trend is down. I'm looking for a retracement. I see resistance here at 6,520. I wanted to have it come up here and roll to take a short if you're not already in it. If you're already in it, go ahead and put your stops above that. So in a nutshell, when you hear something like that in the room, that's what that means. That means that the trend is down. You're looking to get short. You're looking for a rollover up here to get into it if you're not in it. And if you are in it, of course, put your stops above there. Everybody is starting to click with everybody? Everybody see what we're saying? And so here's the other thing you might hear when a trade is entered. All right, it's dropped to, now it might come and stop us out. It's come to that first swing at, I don't know, whatever the number is, 655, 6455. Take some scalper coin there. When we say the term scalper coin, what we mean is that generally if you can put two contracts on, you want to peel one off usually between 6 and 10 or 12 ticks. The sweet spot being kind of 8 ticks. So that's target 1, 8 ticks. So you're looking to peel some money off. And then generally you're going to want to have a runner. A runner is where the market, you allow the market to go much lower than the swings that are established. The runners are where you make your money. So in other words, the runner would be assuming that this swing right here would be taken out to the downside. So for instance, in the room on a big move, you might hear something to the effect of, tell you what I'm going to do. I want to leave this trade on, so I'm going to push this up here real quick. I want to finish talking about it before it stops out. You might hear comments as some to the effect of, go ahead and take those runners take the runner targets out of the way. So when you hear something like that, that means that, let's say your target was sitting here just under the swing as an example earlier, right in here, right? Well, you take that target and you just take it, you just drag it right out of the way. Just drag it out of the way, give it plenty of room, and then the way you manage it through your stops. And what I'm saying here is that is after your scalper target's taken off. I'm going to leave this open so we can watch a little bit because I think this is a good example of a trade. In fact, right in here in real time, you can see that it's coming up to check the mid-band where the predictor is sitting right here. However, we acknowledge the fact that the actual swing itself is sitting right there. See it trying to roll right now? See how it held it? Now here's what we're going to do. Okay, here's what we're going to do. If this comes down and it takes this scalper target out and starts to drop precipitously through this swing area right here, we're going to, and I hope this does it so I can show it, we're going to get much more aggressive on the stops. In other words, we're going to start dragging this puppy down very aggressively, okay? And then we're going to start moving this up. We're essentially going to box it like this, all the way down. Box it all the way down until either the target or the stop is hit. Diane, usually in this Asian session, we like to trade and track 6A, 6J, 6S on the currency side of things. We usually like to watch gold. I'm going to get to the gold trade in just a second. Sometimes crude oil will be moving. I think we have a crude trade on. In fact, let's do this. Everybody understands this 6J trade, right? I'm going to move on to the other charts. I have several other trades open. I want to cover them. Okay? Is there any questions on this? 6J is the Japanese yen. It's usually the one that moves the best. That's the Asian market opening at 5 a.m. Pacific. So we're about 38 minutes into the Asian market trading. Yeah, I have a little trade I put on crude oil, and I want to show it. It's down a little bit, and I want to show why it is. But yeah, crude is chopping sideways. So if you want to consolidate this, you hide Object Trader. Clicking that, now you just have the chart itself. You can compress that down a little bit and just sort of keep an eye on it in the corner over here. Okay. All right. So that's 6J. Let's take a quick look at gold. So I did something similar on gold here. Quickly going back to what is going on with gold. In here you can see this would have been late morning today on gold. We were in a sideways condition, but trending down. So if you hear that kind of comment in the room or anywhere else, sideways to down, what does that mean? It means it's a little choppy. In other words, you're in a range here. And how do you trade this? If you see a market that looks like this tomorrow, how do you trade this? Are you getting long or are you going short? If a market looks like this tomorrow. I'm going to circle it with my cursor. I mean, it could be gold, it could be anything. You see a market that's doing this, how are you going to trade it? Long, short, or stand down? Gold, right in through here. Here, I'll put a big box around it so you can see what I'm talking about. How do we handle that area right there? What types of trades are we taking? Long, short, or none at all? Anybody? Short at predictors, short at resistance, short at the mid-band, shorting rollovers. Perfect. That's how you handle that. Good. Most excellent. Yeah. So just circling back here, each time that the market came up to the mid-band and rolled over was a shorting opportunity. There's one right there. There's one right here. There's another one here. You get the idea. Now, when you're in a range, and you hear this Philip typed this in, and there's been several of you that made this comment. When you have a clearly defined range, by the way, just back over here to 6J real quick, you can see that that the mid-band is holding as resistance. Okay, so our stop is safe. You know, you might notice that there's a different stop posture between Gary and I. Gary tends, and a lot of other traders too, this is a personal preference thing. Some people like the tight stops. If you're trading a tight range like this and you're scalping over here, for instance, on gold, you're going to want to keep tight stops. Okay, you're going to want to peel money off at the bottom. If you do have a runner, keep it tight right under here. Get ready to move it, but you want to peel and you want to tighten your stops very quickly. So you're going to get in, you're going to get out. You're going to stop out right here. And your initial stop's tight right above here, right? You reshort it, comes down, hits close to the bottom, you're fading the bottom, you stop out. You re-enter. So you're in scalping mode, right? And as long as it's in this chop, the odds of getting a big runner are pretty small. Well, I wouldn't say 6J is reversing. It's still definitely short. In fact, it held that resistance level where we reshorted on a ball rollover to give us 2 contracts. Take a quick vote here. How many of you want to move this scalper target out of the way? Or leave it? Move it or leave it? Move it? Oh, leave it. We're digging some votes here. You got 5 seconds to vote. M or L? Cast your vote. All right, while you're pondering that, how about we take the stop? How do you like moving this? How about taking the stop down into here? Move it. Move the stop. Oh, everybody wants to move it. All right. Okay, tell you what, we got a runner. We got a runner on our hands. There is a running and it's running. All right, tell you what, we'll take it down just under the swing right here in case we pop through the swing. How's that look? And then we'll still have our other runner down here. All right? See it? We'll leave that puppy way out of the way. Okay, we pulled the stop down now. So if this comes down and takes this target out and breaks this swing, we're going to get very aggressive on the stops. Gold is rolling over. Our stop is right up here. If this area breaks on gold, now I have 2 targets down here. How many of you want to take the first target up closer on gold? Yes or no? So in other words, if it wicks through here, we get out of 1 right here on gold. Anybody like that? That breaks, we'll take our stop down. What about taking the stop to there on gold? Everybody likes that? Closer? Bank the coin, Jeff says. Okay, there you go. I mean, I could actually pull it up in here, but all we're looking for is for that swing to break by about 3 ticks, right? And it'll pop 1 off and it'll lock that profit in. And then our runner's down here. It's almost kind of the same thing we're doing here. You know, I'm going to take it, I'm going to fade that swing by just a tick and let it pop it. And then we'll still have our runner down here, okay? Everybody see that? See how we're managing it? How about moving the 6J stop down into here? We're getting very aggressive, looking for gold to pop. Here it comes. Bam! Just like that. Bam! Gone. Just like that. Look at that. Look at that. There you go. That's how it's done. Everybody see that? Sweet. All right, here we're going to go. We're going to take gold down. We're going to take the stops down into here, just above Stell. And you know what? You got a predictor there. I'm going to fade that predictor on that next gold target right in there. See it? See the predictors? We're going to fade that and look for a little bam down there. Took both. Do you see that? Took both the runner and the scalper out. Look at that. And it reached in show object trader. 510 bucks. Bam. That's how you do it. That's how it gets done right there. See how we managed that trade, everybody? We got in and the bar closed way up here on that retracement. We dragged our targets out of the way. We added on a bar rollover, bar close, short. Everybody, I think it wasn't Eddie's idea. Whose idea was that? Carl, I think it was. Everybody said Carl's a genius. We added one in the rollover up here. We put our stops just above here to be safe. Never got close to the stops. Rolled over. Bam, took target 1. Bam, took target 2. Sweet. Don't you love trades like that? That just gets your goat. I know it's in sim, but hey, it's fun to do it, to pull it off and nail it. It's even better to do it with real money, right? All right, let's go back over here and manage this gold trade. And I'm going to bring, I got a NASDAQ open position over here using the sniper line. I opted to not go with a box on NASDAQ. I used the sniper lines. It filled right here on the close above it. This bar right here closed up, filled us long. We're up just slightly, 15. And notice how we're hitting resistance here on NASI right in here. See, it just wicked it. So, you know, I don't know how everybody feels about this, but I don't see NASDAQ going a whole lot anywhere. I'm going to go ahead and take this target down to within the confines of here, and then really kind of take this stop up a tick under the entry. So in this condition here, it's either going to bounce off of our entry, come back up, fill us just shy of 64. I don't know, maybe give us 4, 5, 6 ticks, something like that, or we'll lose a tick. No, it's all in Global Sim, Carl. I don't think that was my live account. Let me double check. I thought I made sure everything was Global Sim tonight because I do not trade after hours, just to be clear, everybody. I do not trade after hours. I don't do this. This is not what I do. I make all my money in the morning. In that morning session, all the money is made. And you're done for the day. No mas. Okay, gold's retracing. I'm going to go ahead and leave this stop right here. It'll still be profitable. Let me open this up so everybody can see. We're actually short from here. Just it's a little bit light, but I just want everybody to see it. The short entry is here. So we have what's called a free trade on here right now, meaning that if and when it was to take this stop out, we're still going to make like 3, 4, 5 ticks. See that? That's called a free trade. So in other words, we've already hit a target here, right? We hit our first target. We have the runner target right here, and we have a free trade because even if it stops out, we still make 5 ticks. Oh, it's green on NASDAQ? Yeah, that's because it's in a different account. It's in a different account. I have, by the way, there are ways, I'll show you before we close, there are ways to create different accounts to track your profitability in different instruments. So even when you're in sim, and I'll show you how to do that. It's really, really super easy. But trust me, I can assure you that it's an account I call PA. It's a separate tracking it's a little tracking sim account that I use. In fact, let me drag it down and show you. Right here. Here's the positions that are open right now. I got a crude trade on. I'm going to show you in a minute that I believe I used a box, and I did that intentionally. I wanted it to fill, but it's not a trade I would have ever taken. Here's the PA account, and I'll show you how to create those. Like say, for instance, you're trading in Sim. You want to track your performance on NASDAQ, YM, you know, whatever, the Russell, crude, and so you can create separate Sim sub-accounts, and then when you go to trade them, you can track them separately and see how you're doing in your account tab. It's really easy to do, and it helps you separate, because sometimes within the Sim account itself, if you have everything kind of glommed and lumped in there, and you're trading multiple instruments, you come back later and say, did I make any money on that NASDAQ trade? How much of this gain or loss is attributable to gold? And I know I traded the Russell, but did I make any money on it? This will give you a way to track that. Okay? Really easy to do. We'll get that all set up. All right, so we're in NASI. We're up a couple of bucks. We're looking for either a pop-up BIP to take this little target. Let's take a quick vote before I adjust NASI. How many of you want to take that target up out of the range like that? Yes or no? Quick 5-second vote. Yes, move it out of the range. No, leave it in the range. Team makes the call. We're taking a vote. 5 seconds. Ooh, counting no's. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 plus. And I only have 2 yeses. All right. No to moving it. The yays have it. In it stays. All right, so we're upside down a little bit on crude. I've got 2. Let me shrink down NASI. We'll tuck it in the corner so we get more room to watch other charts. Hey, what do you think about getting out of that 6J? Was that a good move or what? Look at what it's doing now. That's how it's done. And let's come back over here. Let's see, we got our gold. I'm not moving that gold stop. If it stops, it stops. It's a free trade, so whatever it's going to do, it's going to do. All right, let's get crude over here, and let me show you. I did this intentionally. I did this absolutely intentionally because it's doing what I wanted it to do, because I can show this. All right, I'm gonna take a 20-second question for the team, and here's crude oil. And let me explain what happened, and then I'm going to ask a question. Ready? I had the region box drawn, long enabled only, okay? And I drew the box like such. See it? And it filled right here. And I think I put 2 lot on. Yeah, I got 2 lot on. So I've got targets here, and the stops are down here under the midband. Now I'm going to open the floor up for 30 seconds, and I'm going to ask the team this question. What did I do wrong on crude? What's wrong with this trade, and why am I upside down? Just look at it for a minute. We've been talking for almost an hour about these trade setups, so almost everybody, pretty much everybody in here should have a good idea of what is wrong with that trade. And why are you not surprised it's upside down? We're talking about this oil trade right here on the right, this one right here. See the region box? See how we got long right here? Targets are here, and the stops here. What did we do wrong? All right, NASI stopped out. We're out of that trade. Just a tick under break even, so you know, probably lost $5 on that trade, so that one's done. Get that out of the way. Get gold over here. So we just got gold and crude. Gold's going to stop in a minute unless it rolls. It looks like it wants to roll. What is wrong with the crude trade? Why are we upside down like that? Why don't you want to do this tomorrow and don't get into trades like this? Chop should be looking for more of a phantom. I don't know. That's where I struggle every time. Predictors are moving up. Double retrace at the top. It wasn't. Peter got it. Okay, let me help you out. It's perfectly okay. And a lot of you in here are completely new. So if you don't understand why, it's perfectly okay. Where is support on crude right now? Right around here, right? I mean, in all due respect, didn't the last trade set up right in here? Right in here? So some of you said it. You had to wait for a deeper retracement. Yes. You should have waited to box in the midband. Yes. We got in too early. We got into the middle of this range. That's a no-no. Okay? We all can see clearly the top of the range is here and the bottom of the range is here. We put a box right in the middle of it. Was that a good idea? No. You don't want to do this. I'm glad it's doing this because I wanted to show how this was going to do exactly what I thought it was going to do. It's going to chop around in here in the middle of this box. You have to make decision points at or around the swings. Sometimes you might hear a comment in the room to the effect of, we're in no man's land right now on, crude oil. It's in no man's land. What does that mean? Well, for me, when I say it, what it means is that we're not there. Gold just stopped out. No man's land would be a range where you're not at the top of the range and you're not near the bottom of the range. You're somewhere in the middle of it. These are not good areas to take trades. Just like taking a trade on a thrust. Remember we said that's a no-no? When a market thrusts in a given direction, we do not take the thrust part of the move. We wait for pullbacks. This is a similar situation right here. If you're floating around in no man's land in the middle of a range, that's not the place to take the trade. It has to come to a support or resistance level to take it. Because sometimes you're going to be stuck with these conditions where it's topping up, you're up a little, then you're down. So the way this is set up the way it is right now is, where is our stop sitting? Here's our stop. Can you see it? Just see a little stop thing right there? Don't fiddle in the middle. I like that, Eddie. That's a great saying. So what quite possibly could happen is the nightmare scenario, just like buying into a thrust move like this, is that what could happen is the market comes down, wicks into support, takes out the stop, and then bounces right where we should be getting in, down here. I'm going to let it do it. I'm not going to take it off. I'm going to let it come get it. And then we're going to stick around a couple of minutes here and see if this bounces. That was a nice box, though, with the way you drew it. Yeah, I'll give you that. That was a nice box, but it was in the wrong spot. That's the point I'm trying to make, right? It was in the wrong spot. So, we say this all the time in the room. You got to be patient and pick the right spots. By the way, I did have a 6A box on, sitting right at the mid-band. It never did fill. Let me drag it down. And I had short toggled off. See the region box here? In fact, it might not even be enabled anymore. Let me check. Yeah. Yeah, never took it, never filled. Let me turn it back on here. I put it on right here. It came on right here. It would have filled if you had this. But it never broke. It never broke here. It broke down. So that's what I wanted to show was, in the case of an uptrend, you can see very clearly we're in an uptrend here, right? We pulled back. We had a trade here. That was another long, and I was looking for a bounce long in here. But if you have long enabled and it never closes above here, then and specifically I'm referring to this area right here. Hold on, I thought that was off. Hold on a second. Sorry about that. Yeah, so over here, if you have a region box, that's what I want to show is that a bar never closed up here. A bar would have to, oops, didn't want to do that. Oops. What am I trying to do here? Oops, region box went away. Okay. Anyway, it never closed up, so we never got the trade. When long is enabled and your box, you know, looks like this and it never closes up, then you're not going to get filled. And that's an advantage of having these boxes in an uptrend, is that, you know, for all we know, this could continue to sort of dribble all the way down into here somewhere, and we're not going to get filled until it closes up. Just like a bar close, right? When you turn the bar close on, it has to close up or down to take the trade. All right, so it looks like it's not going to get our stop on oil here. It might just sort of wiggle around in the middle here. It's got the 2 lot on. It's upside down, a couple of 6 ticks. You know, for all we know, it could bounce and come up and hit these targets. We don't know. But I'm going to go ahead and wrap. Thank you for coming, everybody. Thanks for